All right, guys, welcome to today's awesome meeting. Welcome to today's awesome class, right? So, today we'll be sharing or talking about something very, very important in the market, right? Something very, very important in the market. Meanwhile, the testimonies keeps coming, right? Keeps coming, right? But the good news is that no matter the amount you're making in dollars, there is always room to go higher, right? No matter the amount you're making in dollars, there is always room to go higher or to move to the next level. It's not to stay in a particular place, right? So, and if today is your first time joining this channel, do well to share. Click on the subscribe button. It's never too late. It's never too late, right? There are things and things that will definitely happen more, especially for a daily analysis. Share to them for them to join taking the daily analysis and making a whole lot of money from the market. Remember, this market is worth over $7.5 trillion, right? So no matter the amount you make, there's always large amount of money to be made too, right? So today we'll be talking about slippage and reporting the market. Remember, I said this channel is not for me. It's not just for me. It's for all of us, right? It's for me and it's for you. You that is viewing the channel is also for you, right? So it's for the forex community. So let's do well to make people to reach out to more people outside that are looking or finding it difficult to trade and navigate the forex market, right? So what I'm about to talk today or share with us today is something we've encountered, something that is very common, something we've been seeing for long, right? If you've been trading, you must have encountered what is called slippage or reporting in the forex market. Slippage or reporting in the forex market. Personally, I've encountered, especially in those years that we started, right? It's not the first, not the second time, right? And it's very, very annoying. Slippage alone can make you to lose money from the market. Slippage alone can destabilize your trade setup and trade analysis. Only slippage. And also let's talk about the reporting too and reporting in the market. So it's very, very important to know what the slippage is and how to avoid it in the market. How to avoid it in the market for you to be profitable trading the forex market, right? So what is slippage? Now, slippage occurs when the price one intends to buy the market or sell shifts or moves away from the execution price. Let me explain further. Now, by the time you get to your chart, this is your chart. Let's say you wish to buy this market, Euro USD. You wish to go in for a buy, right? And this is the price you wish to buy the market. You can see 1.0902216, right? This prevalent market price you are seeing on my chart. Let me zoom it in for we to see. Now you wish to buy the market at this prevalent market price, right? That is the price you wish to buy the market. Now you quickly enter the market you wish to buy and click your buy in the market. Instead of market giving you the order at the same place at the prevalent market price for a buy, they push you to this particular place here and put it there, they put you there for a buy. Instead of here, they put you here for a buy. It's very annoying. It's not the first time. It's very, very annoying, right? So if you have experienced that before, don't worry, you will know what to do right now. You have not experienced it. There is possibility that you might experience it and ways to stay away and run away from these stuff, right? So instead of triggering you or placing your order here, they shift it to this particular place. So at this particular time, what do you do? Right? At this particular time, what do you do? But this is what is called slippage. Probably you place for a sell at a prevalent market price. Instead of the market to trigger you or execute your action at that price, they shift it further below. So it's very stressful because before you approach profit, you will have to cover the other empty space. You have to fill it up then before becoming profitable or before entering profit in the market. Just like here now, if you execute an action, if you execute an action here and or you place an order here, they take you to this place. Before you become profitable, this market will have to come back to this your order and go above, and it can take a whole lot of time. It can destabilize one. So in this situation, what do we do? So that takes us to what we have today, right? Now, three things happen in the market, right? When it comes to slippage, three things happen in the market. Number one, sometimes when you place a trade, there is no slippage. That's the number one thing that happens in the market, no slippage. Now, what is this no slippage? If I place a market buy or sell, or let's say I place a market for a sell right now, it's been executed. without at that same price I placed it. If you watch here, you will see the price I placed it. They didn't take my order to the highs or to the low. At that same price I placed it, that's the place they executed my action. So the broker did there was no issues, nothing happened in the market. At that same price I placed it, that was where it was executed. So that is what no execution, no slippage simply means in the forex market. So that is what the no slippage simply means. So we don't have any issues with the no slippage. As a matter of fact, everybody wants, as you place your trade is being executed at the price you wish or at the price you want. So it's a good one to have no slippage in the forex market, right? So we also have the second one, positive slippage in the forex market. Positive slippage is not really a problem, right? Because everybody wants either no slippage or positive slippage, right? So no slippage is there's no slippage at all. They are not taking your order to any place. Then positive slippage is even taking your order or executing you as at a more comfortable price, right? Executing your order at a more comfortable price. That is what positive slippage means. Executing your order at a more comfortable price. Now let's say you wish to buy the market here. You wish to take entry. Remember here we sold, right? But we wish to take entry for the market here at this particular place for a buy, right? Or you wish to take here for a buy. Everybody, yes, you would like to take here. Yes, you would like to buy there. You would like to buy there. You want to buy there. Then you go in for the market for a buy. Instead of the market or instead of your broker executing your entry at this same price, which is the 1.08590, they take you further lower, making it easier for you to buy at a lower price. That is, they are making it easier for you to buy at a lower price. Everybody wants to buy at a lower price. So positive slippage, everybody needs positive slippage. Everybody wants positive slippage, right? That's not a problem. Positive slippage is not a problem to traders. No slippage is not a problem to trader, but this is the place where you find problem with the traders, right? I'm telling you, this one is really, really a problem to those of them. So this one is really, really a problem when you find it happen. Oh my goodness, it can make one to go something else, to go gaga, right? So this is what I'm trying to talk about. Negative slippage. Negative slippage in the forex market. This is the bad one, right? This is the bad one. Negative slippage in the market, right? So this particular one happens. Remember, when you place the market for a buy, the market or the brokers will look at any particular price. You always find those of them selling and buying at any particular price. So when you want or you wish to go to the market or you wish to enter the market for a buy, and there is nobody that is selling at that particular price to pay you, right? So these are the things that causes the negative slippage in the market. You wish to sell the market and there is nobody at that particular time buying to pay you to merge you at that particular time. So that's what causes the negative slippage in the market, right? So I wish to buy here, as explained initially, I wish to buy the market at this particular price. I entered for a buy, just like here. I entered for a buy. When I enter for a buy, instead of the market to trigger me in for a buy, they shift it to this particular place. That is one of the things of no slippage when there is nobody to pay. If there is nobody to selling while you are thinking of buying at this particular price, that's when you will see this push. They will take you from this particular place to these other highs, and it's not very, very good. It's very, very devastating. It's very, very bad. It's very, very bad. I will take you through what causes it, why the market moves that way. It does not only happen for your entry in the market, it also happens for your stop losses and your take profits in the market. So what causes this market or what causes slippage, especially the negative slippage in the forex market? What causes it, right? Now, quick buy or sell happen in the market. When the market is very volatile, moving up, moving down, moving up, push in the market. So that is making the prices to continuously change, right? Price is continuously changing. Now, let's take for instance, you wish to for a bid price, um, for the bid price, you wish to enter the market for either your buy or sell. Now let's go to our market watch. This is Euro USD. You can see the bid price, you can see the ask price. The ask price is the minimum price a seller is willing to sell to you. So it's the minimum price the broker is willing to sell to you. You have 1.0896. You can see it's changing continuously. In this situation where market is moving continuously at a very high speed, there is possibility that that ask price that the broker is giving to you, which you wish to buy the market at that particular time, before they receive the server, start checking the free margin, the margin and the margin level, market has already left or market has been shifted. So there is possibility that they will take you and place you in another zone or another price in the market, because by the time you place a trade, the broker has to receive it. When the broker receives the position you are taking, they will now execute it. So if it takes a longer time in the market, there is possibility that that quick market that is moving up and down will help them not to trigger you in at your anticipated price. So it's very, very annoying. But I will tell us things to do to avoid slippage in the market, right? So during news release, whether planned or unplanned, right? So during news release too can cause slippage in the market. During news release, when we have a lot of news coming out, especially on a very good day, interest rate and the rest, you will always find slippage, right? You always find slippage, right? That is why sometimes when you set your stop loss in the market gets close to your stop loss, trying to break it, passes it without hitting your stop loss. That is as a result of the negative slippage. So when market is news adds volatility to the market, news makes the market to move up and down, and it makes a lot of persons to push to a particular direction. Let's say news on United States dollar is coming out on interest rate, and the interest rate is at good for dollars. So everybody will like to go buy in dollars. So in Euro USD, everybody will try to sell. So you that is clicking buy, there is nobody to pair you, there is nobody to merge you. So even your stop loss that is placed at a very sensitive at a very sensitive low that you are buying, your stop loss placed at a very sensitive low, there is possibility that the market will pass it, keep going, at the end of the day take like 80 pips, 50 pips from you before making you to leave the market. So that is very, very important. That is why slippage is very, very important in the market. It could be so bad, it could be so bad, right? It's not advisable in the market. This is something that nobody wants to experience in the market for the slippage, right? So another cause of slippage in the market is the broker, right? Another cause of slippage in the market is the broker. Another cause of slippage in the market is the broker, right? So that is why it's very good to use a regulated broker, a very nice and good broker in your trading. If you are using the wrong broker, oh my goodness, sometimes, especially the brokers that are not regulated, sometimes they intentionally do that, especially during news release. They try to people's entry and the rest. So that is why it's very, very important to use a regulated broker. No matter what, use a regulated broker, right? Broker, using the right broker will help a long way. If you're experiencing slippage a lot with your broker, you're experiencing slippage in different places, all you have to do is to change broker, right? So it's not bad at all, because what you're talking about is your money, it's nobody's money, it's your money, right? So if you're experiencing slippage, change broker. If you're experiencing slippage too much, change brokers, because brokers, in one way or the other, traders don't know, especially newbies, doesn't know what happened in the market. Brokers, they take people from one entry to another, they take people from one entry to another. A good broker, even though slippage happens, it happens once in a while. But a bad broker, you see slippage happening every time. So if you're experiencing that often in your with your broker or in your trading account, do well to leave that. And if you don't have a broker, there is still a link below the comment section, right? Or below the description rather, where you can make your registrations and also trade profitably using the link there to trade with the broker, and you also make good money from the forex market. And if your broker is good, fine and good, keep trading with it, right? So these are the broker. I mentioned the broker. Broker is one of the costs, right? Trading during the close of the US session and the opening of the Asian session, right? This is for those of them in Africa, right? No matter the part of the world you are watching from, I will also explain that this is just the difference in geographical locations and the places you are, right? So if you are staying in Africa, let's say West Africa, Nigeria, right? One of the things that causes slippage is trading between the close of the US session and the opening of the Asian session, right? Opening of the Asian session from 10 p.m. The Asia opens 10 p.m. to West African time, or let's say Nigerian time, right? But if you really want to avoid slippage, do not trade 10 p.m., 11 p.m. West African time or Nigerian time, right? Any part of the world, just change it, convert it to your own time and your zone. You will get it. But in West Africa, 10 p.m., 11 p.m., do not trade during that time. But any part of the world, just check Nigerian time, 10 p.m. What could it be in your own country, right? So trading 10 p.m., 11 p.m., 12 p.m., right? Is somehow you will experience slippage. Most of the times you experience slippage because the market is very, very dull at that particular time. You see market will be as if nothing is happening. After a while, you see it shifting. You see it shifting. So those things are called slippage in the forex market. So on a good understanding of this, we give you an edge in the forex market, right? So 10 p.m. to 11 p.m., right? So how to avoid negative slippage in the market. So how do we avoid this negative slippage in the market? One, get a good and regulated broker, right? If your broker keeps giving you issues, giving you negative slippage, keeps giving you negative slippage, is not normal, right? It's not normal. I know what I'm saying. We've been in this market for years. If your broker keeps giving you a negative slippage, that is not normal. Look away and leave. That is your money. Look away and leave. Look away and leave, right? Not only that, always check the bid and ask price in the market before entering the market for a buy or sell. Before entering for a buy or sell in the market, always check the bid and ask price. That is another important way to avoid negative slippage. Check, okay, this is the bid price. The bid price is the maximum price a buyer is willing to buy, and the ask price is the minimum price a seller is willing to sell. Let's say you want to trade Euro USD. Check their bid price. You can see bid price here, Euro USD 1.08979. Though it changes, their ask price 1.08991. So if you wish to buy, you want to buy the market, quickly go check in the ask price where they will trigger you in, and make sure there is no gap in the market, right? Make sure there is no difference between the price line and the ask line, right? So check the ask line, check the price where they will execute you, and if possible check the ask line on your chart. But remember to check this bid price and the ask price in the forex market. Is very, very helpful. That's one of the ways to avoid negative slippage. So that by the time you see that the ask price is very wide compared to the price you wish to take entry in the market, just leave the market and avoid the market. By the time you see that the broker's ask price is very wide, avoid the market, leave the market, and stay away until the prices comes back. That's another way. Doing this, you will never have a negative slippage, right? So the next thing we have here, avoid the market during news release or being careful, right? So this is what I'm trying. There is no way you can totally avoid the market during news release, right? As a matter of fact, there are some traders that only trade during news release. That's the only time they trade. But what I'm trying to make for us to understand is that whatever you are doing during news release, just know that slippage can happen. For those of us that trade news, try as much as possible to know the news you are trading and how to set your stop loss and your take profits, right? So during news release, you find slippage, right? If you don't know how to trade news, or you, I think there is a video on news on this channel, right? There is a video on this channel on news. You can also go through it on how to trade your news. That's a fundamental analysis. But if you feel technical analysis is the best for you, remember you can't trade one leaving the other one. Even though you're trading the technical analysis, you have to consider your news without even trading. No problem, even though you don't trade news, but you have to consider knowing the time that the news will be released and the time that the news will not be released in the forex market. So you have to know the time the news will be released and the time the news will not be released, right? So putting all these things into consideration helps one to avoid slippage in the forex market. Slippage could be annoying, but when you got to know all these things, it will be very difficult for you to suffer from slippage, right? Another way that your broker helps you. Another way that your broker helps you to avoid slippage, this one is from the brokers, not you now, is what is called the requoting. Requoting, R is just the way we find it here. Requoting, right? Requoting system. Requoting system. That's it, the requoting system, right? This is the requoting system. That's still another way your broker can help you. Now, have you ever placed a trade? Instead of executing, they bounce you back. They tell you no quote found, no quote found. That means no matching, nobody merging at that particular time, no matching price found at that time. You have to replace the trade. It's still another way of the broker helping you, which is not bad, which is not bad. But I will tell you, if you are receiving a lot of requoting, do well to change broker, right? Requoting is not bad. When negative slippage happen often, it's time to change broker, right? So requoting is good, it's not bad, but when it happens often, something is fishy, right? Requoting, whenever I place a trade, it bounces you back. If it happens often, that means something is fishy, right? You are enjoying this video, do well to share to your friends, your families, those close to you, so that they will be able to capitalize in the market and make judicious use and something reasonable from the market, right? So as a way of recap, we started with slippage and requoting, right? We talked about what slippage is. It could be annoying, especially the negative slippage, right? But when you're enjoying the no slippage and the positive slippage is very, very good, and no slippage is very, very good too. Now, no slippage, there's nothing happening. The price you placed in market is still the price executed. Positive slippage, let's say you are buying, they are giving you at a very good low, a very good support zone for you to place your market. Very sweet. If you are selling, they are giving you a very good resistance zone for you to sell. Very, very good. That's what positive slippage simply means in the market. But negative slippage is where we have the problem which is not really healthy for traders. And I also went ahead to tell us causes of this slippage, right? Quick buy or sell happen in the market. You see the market moving up, down, up, down, up, down, up, down, up, down, right? So that's one of the causes. During news release, whether planned or unplanned news, there are causes, and also tell us what to do during that. Brokers, this is it, especially brokers that are not regulated. They are one of the cause. Trading during the close of the US session and the opening of the Asian session. Yes, if you're in West Africa, that's between 10 p.m. 10 p.m., 11 p.m., do not trade at that particular time. 10 p.m., 11 p.m., do not trade, especially if you're in West Africa, Nigeria. But if you're in any other part of the world, any other part of the country, Europe, North America, South America, any part of the world you are, all you have to do is to calculate it, check it in your own geographical location, and you see it working for you. It works generally for everybody. How to avoid negative slippage? Get a good and regulated broker, because brokers, they also, especially those brokers that are not regulated, they also affect you negatively in the market, especially during news release. Always check the bid and ask price in the market before entering the market for a buy or sell. Always check the bid and ask price before entering the market for either your buy or sell. I showed us here the bid and ask price. Look at it, bid and ask price. Check whether the ask price the broker is giving to you is very wide compared to the bid price. Is very wide, or is it considerate compared to the bid price, especially when you want to buy the market. Always check the ask and the bid price, right? So avoiding the market during news release, avoiding the market, but there's no way you can avoid the market, but you can just put it into what consideration, right? Reporting system. Reporting system is the only way your broker helps you, right? When they don't see a good price to match you, they tell you quotes not found, so then you have to replace the trade again until they see a good match for you. But if the reporting is too much, something is fishy, right? Note, when negative slippage happen often, it's time to change broker, right? So requoting, we have explained matching you up. When there's no match, they take you, they bring you back. So are you enjoying the video? Do well to share. You can see this topic is beneficial to us, right? You will not know what to do when you are placing a trade. You will not know what to do and know what to expect during news release and center. If it has not happened to you, you wouldn't bother, right? You know how to do now, not for it not to happen to you. You know what to do for it not to happen to you, right? But if it has happened to you before, you will not know what to do for it not to happen again. So you're enjoying the video. Thank you very much. Do well to trade, trade, and trade and trade, making some bucks from the forex markets, making some bucks, something reasonable from the forex market. All right. Thank you so much. Bye now.